Okay. All right. Now you should be able to see my screen, my slide, outsourced to automation. How are you today? This is the third part, and as usual, the question will be, have you had your dinner yet? Okay. So the session will be probably until about 8:30. You can listen to me while you are having your dinner. All right. Usually I don't eat before any session because then it keeps me, all the blood flow will flow to the brain and not to the tummy. All right. So let's get started. Okay. So there's this question place that you can ask me question. So I'll be referring very much to the questions that you ask me, so that I know what questions that you have. Okay, because today I'm going to cover automations, which is maybe like not very well covered, because usually when we talk about all this, right, it's usually on method. But today is just different. I'm just going to cover what my job is. All right. Just give you a little bit of a background first, okay? But before that, let's browse the disclaimer. All right. So in this session, it's educational. All right. There won't be any financial advice here. Okay. All right. So a little bit about myself, just to give you a bit of a background. So I'm training, yes. I'm also trading, yes. But the other side of my job happens to be designing consultancy, testing, back testing, forward testing, trading system. Okay, so I belong to a group, all right, and I serve in this group, not the coding side, although I can read some of the codes, but compared to those very smart programmers, I'm like, they are level 100, I'm like negative 100, this is the level. But yes, I can read codes, I can write simple stuff. I'm never them. Okay, my main function is to understand the client's need on their automations, and then design the automations, test it, be the liars between the clients and the programmers, right? So we are a team, and is an international team. All right. So we work with family offices, banks, hedge funds, professional team who requires automations to trade. All right. So their way of trading, in terms of their definition, versus our way, which is retail based, they are totally very different. Okay, the only thing is what am I restricted? It's then of this NDA, which I can't disclose a lot of things. All right, but I try to share as much as possible. There are simple automations which you can adopt, all right, in your trading. So let's get started. All right, now before this, the automations I'm going to share, it's something I'm using myself. Okay, so in this aspect, because I'm using it, so it's actually safer for me to talk about it. All right, and I'm not penalized because of those NDA. Okay, so I talk about a bit of a trading profile, a repeat of what I did, right, in the first and second session if you haven't attended yet. Right, so I'm a what we call a 4-hour trader. That means I trade every 4 hours. All right, I'm not a scalper. What is a scalper? Scalper means that basically you look at the chart and you attempt to trade in a much lower time frame, like maybe like 1 minute, 5 minutes, or even 15 minutes. Right, I don't do this. All right, so sometimes I hold my trade for 2-3 days, even 5 days or 10 days, depending on the movement, and even into over the weekends. Okay, so I trade in quite a variety of instruments. So I have stocks, I trade stocks, I trade futures. All right, and then the most of the automations happen in trading the forex, indexes, oil, gold, and crypto as well. Okay, so the whole idea is I don't, because of what I'm exposed to, because I know how those big guys trade, I don't really put all my trades into 100% automations. That means I still retain a little bit of a control, which is again to replicate what those so-called big guys are doing. All right. So there's a lot of dreams and automations, for example, such as you buy in MT4, MT5 language, you buy a EA or you buy expert advisor, which is like a robot. You buy it and then you leave it there and then it keeps trading for you. But we've seen, or I've seen, that people burst their account. For example, just last year in during Christmas and in Jan, all right, one of my student, all right, the student had these automations, right? And the automation wasn't really making her a lot of money, okay, but it wasn't losing money. So the student used automations for about 2 years already. So initially started with 10K, but because it's giving her returns better than the banks, okay? So therefore she continued to use it and she continued to pump more money. All in all, she put in about 180K, okay, 180,000, right? 180K, right? So by the time that the student came to me, right, in last year December, she was down, all right, she was down 180K. She put 300 plus K inside. I got it wrong. She was down 180K, right? So the 180K was down because of one thing, right? The automation, so-called, she just leave it there. She didn't even check, all right? Didn't function properly. So a lot of trades, they wasn't closed. So what that automation did is that they attempt to average down a trade that's wrong, so that when it becomes correct one fine day, it will exit as a basket. All right. So one of the key positions took by that automation, that EA, is to keep on going long, which is euro dollar. Okay. So it bought into euro dollar, it bought into pound dollar, it bought into mixed basket of dollar yen and dollar franc. So it shorted dollar yen, dollar franc, but basically it went in the wrong direction and it keeps averaging down. All right. So by the time that automation, the student discovered that, right, she was already down 180,000, and then I actually did something to help her recover. So all in all, we recovered the amount, and then she's net lost about 50,000. Okay, and she's happy about it, and so we decided to just close everything, right, because of this. So what I'm trying to share with you is that there's a lot of automations out there. All right. And end of the day, it's very, very nice to see the upsloping graph, okay, that's being presented with back testing. Okay, some even attempted forward testing. But even with forward testing, you do not know whether the automations, they will accumulate positions, or they will go through certain methods like to do a grid martingale, or to do a hedging martingale, or grid style, or whatever style. Okay, so the automations, why that student automation had a problem was because that EA never put stop loss. Okay, it never put stop loss, therefore it never gets stop out. It never gets stop out, therefore the losses are not realized. When losses are not realized, it keep losses. Okay, but whenever it's able to exit, so it keep on clocking profit, all right, that you see on paper, but that losses kept accumulating, and finally the account, a lot of people get their account burst, all right, but for her, she had enough money. We are able to rescue that. Okay, so this is the basis of the automation I want to share with you, things that can help you remove menial work, repetitive stuff. All right, so that's the automation I want to introduce here in this session. Okay, but there can be a lot of automations I can talk about, but the objective is really to talk about how to remove all these repetitive stuff and how to use it to control your emotion. Because many times when you are trading, you have a wonderful method. All right, you heard of trainers or people who talk about that. I have this sure win and I trade live in front of you. And when you really go and do it, how come you're not making money? Okay, so what is wrong? And a lot of people will keep on attending lessons after lessons, pay money, and keep on getting another guru and keep on having a holy grail, hoping that the next one is a holy grail. And how come that every time it becomes a disappointment? Have you ever wondered that it is not the method, All right, a lot of people would blame the trainer to say, hey, that one is just selling costs. All right, but have you ever wondered actually it might not be the method? It might be also how you manage your trade. Okay, things like, for example, let me just go through this one. Okay, so I just want to do this as a revision. Okay, so which are the weaknesses? Okay, for example, have you ever wondered, oops, here we go. Okay, have you ever wondered, for example, the weaknesses of your trading? Things like, you have over traded. So the trainer or the method says, okay, don't over trade. If you have a loss of, let's say, 2%, stop trading and take a rest. But no, we can't control the emotion. We actually over traded, or sometimes under traded. What do I mean by under traded? For example, let me know whether this happened to you. Okay, so for example, you put in the first trade, you are wrong, okay, and you lose $10, right? You put in the second trade, wrong again, you lose $10, right? You put in the third trade, wrong again, you lose $10. You put in the fourth trade, wrong again, you lose $10. Okay, now what will happen after the fourth trade? What will you do then? Let me know, in the answer question box. Let me know what you do. Okay, first option, stop trading. Second option, go for the fifth trade. Oops, you can't see my screen. So let me just. Okay, here we go. It's back. So first one lose money, second one lose money, third one lose money, fourth one lose money. And what do you do then when it's the fifth one? Okay, the slides are being shown right now already. I think just now maybe there's a bit of a disconnection. Okay, so you see, when I say under trade, right, what happens? It means that the fifth one might be the trade, might only, the trade that is going to be explosive, it's going to, give you to recover all your losses and make you $100. Okay, so therefore you lose $40 in the first 4 trades, and then the last one is going to give you $100, and net over 5 trades, you are still able to make the money. Okay, because net you still make $60. All right, that makes sense. However, when you are doing it yourself, then it's a total different thing. So when you look at somebody and you see that results and you see that account, oh, wow, I say, oh, this one is good because I can see the account, right? And then I'm gonna make the money. But too bad that account is not yours and you can't repeat that thing again. Okay. Now the other part of what I meant by repetitive stuff, task in trading, is about holding losses. Okay, so the theory, the book or your guru trainer says that you are supposed to cut your losses fast. But how many of you will do this, all right? When you put in a trade and then you realize that it's very, very near to a stop loss, very, very near, and you say, I think based on my previous experience, I think I should just remove my stop loss for a while because my previous experience says that it touched my stop loss and then it gets stopped out and then it just bounced like nothing happened. Okay, recovered like nothing ever happened. And if I don't get stopped out, I'll be able to make back the money. Okay, so how many of you will actually see that it's very close with that stop loss and then you just click the button and remove the loss, remove the stop loss? Have you tried that before? Let me know in the response as well. Never, you guys never had this, removing stop loss before. That's excellent, right? Because while I was training a lot of traders and mentoring them in my earlier days, a lot of people cannot stand it. What they do, they just remove the losses. And worse still, all right, a lot of people by right, the textbook will say you should supposed to let your winners ride, right? And then your winners run and continue to add add on to your winning trades. But no, a lot of people using the same method actually exit the winner fast, okay, and they hold on to their losses. All right. So even when you have the same method, because of the psychology involved, all right, because of your mood at that point of time, because of so many things, right, you can manage a trade wrongly, okay, and all this, right, it's what I mean by you can automate all these things, okay, and you should consider automating this stuff, okay. So that's the basis of today's presentation. I'm just going to quickly for those who hasn't joined me in the earlier session, just to talk about the method. All right. So the main method that I'm using is the whole system, which is called the alien wash. The trigger by itself, okay, it's called wash and rinse. All right. So what is wash and rinse? Wash and rinse. Just give me a minute, because I realized that whenever I switch chart, it will always move. Okay, so I'm just going to share my screen. All right, so hopefully it doesn't move anymore. Let me see. Okay, good job. All right, so let's talk about what is wash and rinse then. When we look at wash and rinse, it means that you have one trade. Let's say you decided to just stretch this a little bit. You decided to go long. Okay, you bought into a certain trade, but instead of it moving up, it actually moved down. Okay, so you panic and you said that, okay, let me just hang on for a while, but you realize that by moving down, it hit your stop loss. Okay, you lose money because of this. All right, and once you hit your stop loss, it actually moved back up in your original direction and exploded upwards. Okay, I'm not sure whether you have this experience before. All right, but a lot of people had this experience and they actually blame it on the broker. They blame the broker to trip their stop. That means that they say that, okay, this is the bad broker. It actually tripped my stop. All right, but this is highly unlikely true. Okay, why I say that it is not true, not highly not true? That's because when we design all these systems for the professional traders, they are designed in a way, right, where they can see all these levels and they forcefully moved in the opposite direction for a while. Okay, so there are such systems going on. All right, so a lot of people think that their stop loss, the brokers do it. Actually, no, because there's a lot of automations that happen this way. All right, so wash and rinse is just to counter this movement here. All right, so that when we trade after the wash and rinse has happened, not before, but when after the wash and rinse has happened. All right, so let me just quickly go through this one here, which I've covered earlier in the earlier session. So for those who know the answer, so let's play along. So at this blue color bar here, which is the one that is white color, right? What do you think? Are you going to buy when you see these white color bar, or are you just going to, or rather the question is that at this white color bar, do you think the subsequent action is to move up or move down? Okay, so for those who hasn't attended my earlier session, just as a revision, so my question is that at this place here, so this is the bar here, do you think that it is more likely to go up or more likely to go down? Okay, now let me just guide you a little bit. You realize that in the past, the movement has been going up, hover, up, all right, hover, up, and this time is the same thing, hover, and seems to be repeating that same movement here. All right, so what do you think? Okay, do you think that, at the bar that I pointed out, is it higher chance for it to move up or for it to move down? Let me know your response at the chat box so that I can roughly, guide you through. Just make a guess, okay? You have 50% of being right or wrong. Okay, so we have one long and one short. The rest, you have attended the session, you know the answer. Okay. Now, so what we do is, of course, we have to refer to the past. Okay. So if you refer to the past, you realize that at this place here, which is a white color bar, all right, there are people who have actually gone long. Okay. Why is that so? They might see this one here as a breakout of the cluster of prices around here. See that? So there's a bit of a high. So this white color bar can be seen as a breakout. That means a breakout, right, of the previous prices. But they forget to check in the past, okay, what's happened in the past, right? In the past, the historical prices was showing that price is near to a zone of a resistance. Okay, so if price continue to move up, then of course that's good news for people who actually bought in. Okay, now what happened if price move down? Okay, so then this will result in a wash and rinse. All right, so our wash and rinse are very, very specific. So what kind of wash and rinse am I looking at? So same thing, if there is a close, all right, of a bar above the previous high. I repeat now, it's just above the previous high. All right, so for example, this is a bar that closed above the previous high. We will be drawing what we call a wash line. Okay, so this is a wash line that we draw, right? So as long as price is above the wash line, we will continue to go long. But if price turns below it, then we will call this white color bar a wash bar, and then the subsequent down action, all right, as a rinse bar. Okay, so this is how we trigger in a trade, all right, which is called wash and rinse. Okay, so let me just show you the outcome. All right, you can see that the wash and rinse happen like this. Okay, we have the wash line. So this is the wash line. So this is the wash bar, and then this is the rinse bar. Okay, some of you might look at it like a candlestick pattern, but it is not a candlestick pattern because it is flexible. It can have minimum 2 candles, all right, across any time frame, or it can be 10 candles, it can be 20 candles. It doesn't really matter. Okay, so there are situations where we have 10 candles, we have 15 candles, that would still equate to a wash and rinse, and I have covered that during my first session. Okay, so roughly that's wash and rinse. All right, so let me just continue this. Okay, so as you can see, if you have gotten the free trial, which is the indicator that I've given you, you've seen in the indicator, it plots all those red color and green color arrows or fixed, right? So these are confirmation of wash and rinse. And last week I showcased the trade on UK, not last week, yeah, is it last week? I can't remember. Last session, I showcased the trade on UK oil, and it moves very nicely after a wash and rinse. Okay, so for example, we had a wash and rinse here, which is a green color. If we track back the movement of gold, right, it actually moved all the way up, and gold is now trading somewhere around here. Okay, now so this is TOR 3.0 indicator, which is also part of the automations that I mentioned earlier. It automatically plot the wash and rinse. All right, you can have a trial. So later I will give you the link to go and download the trial, okay, at the end of the session. So you can just put it inside your Phillip Nova MT5, and it will automatically plot this wash and rinse for you already, right? Okay, now let me just continue. Okay, so later on, I'll be showing you how I look for trades, but today, what I like to showcase to you is what are the functions you can automate, especially to outsource your weakness. All right, so just like I mentioned few weaknesses, which is, for example, you don't let your winners ride. You also, didn't manage to cut your losses, even though we know that cut loss, let winners ride would be what we need to do. There are also some repetitive stuff like trailing stops, determining lot size based on your risk or your risk profile. All these are all automations that can be easily done, okay, which save a lot of your work and help you manage the trade, right? So today I'll be covering this particular automations that I've designed. Okay, one of the automations that I did, right, which is a trade manager. Okay, which is basically to help you manage the trade, right? So this trade manager is part of the alien wash systems, meaning that, you know, if you take, for example, if you take this alien washed method, right, then apart from having the dashboard, the auto box, which I covered last session, all right, and a toy indicator that automatically draw the wash and means, all right, so this trade manager will automatically put in the trade and trade for you, all right. So we can be staring on a chart for long, okay, but sometimes we don't make money also because we are just not there to trade it. Okay, so for example, that, you know, today is the birthday of your girlfriend or boyfriend, and then you're going out for celebration, right? But then you decided to watch a movie, and the movie is 2 hours, right? So it happened that, you know, during that time that you are watching the movie and very lovely, then trades happens, right? But you're just not there to trade it. So it's not that you can't make the money, just simply you are not at the right conditions to make the money. So a trade manager will solve that problem for you, because then it will automatically put in a trade for you as long as you allow it to happen. All right. So it is an in-between of a 100% fully automated system. Okay. So a trade manager probably, as I would think, it's about 90%, 95%, all right, doing all the work. The only 5% which you have to do is to allow a trade to happen. Okay, so I will explain why a certain system is being designed this way, all right? Okay, oops, let me just get the pointer. All right, now, so just quickly go through what I'm doing at this moment. All right, so first, in terms, you know, a method. So we have methods, huh? And everybody can have methods. You know, wonderful 100% sure win method. Okay, there's none of this happening 100%. But you know, people sell their method or come out with strategies that they are very, very confident about it. All right. But one of the key problem is that you sometimes, because of your commitment, okay, for example, you need to work, all right, or you are at a meeting, okay, you are not able to discover the trade. That means you're not able to go and find the trade, all right? So when you are doing stocks, we develop scanners or screeners. But when we are trading into, let's say, instruments such as the indexes or the forex or even gold or oil, what I've designed is a dashboard which monitors all the trades, right, by the second. Okay, so this is the first automations that you want to consider, right? Because if you take a look at a trader's weakness, okay, things like, oh, you miss a trade because you are driving, you miss a trade because you are having a meeting. So when you get to your screen, then what happened? You think that you missed already, right? You didn't get at the optimum price, but you just very tempted to put in a trade, even though you know that you missed it, like, and it's beyond, and it has already moved quite substantially. But you're just scared that it's gonna move even more if you don't put it in. So what do? You quickly scramble to put in a trade when you're not supposed to. Okay, so Guru follow exactly the system, but you happens not to be there and then miss by, let's say, an hour or two. Guru can make money and you see the account very nicely, but you might not, because by the time you put in the trade, right, you only get a little bit only. Okay, so that is a problem. All right, so very important. When we design any system, or even if you consider to design your own system, then what do you do then? You build in alerts or notifications. Okay, so you make sure that, you know, alerts like this that shows bullish or bearish is being sent to you. So in MT5, all right, it's a very simple way to write the code. That's, let's say you have A plus B equal to an alert. Okay, scenario A plus B happens and equal to alert, right? And when it triggered at either you can trigger at X price, that means that, okay, if A plus B happen and it's exceed this price, send me an alert. Okay, you can be sent an alert via email, or you can set up your MT5, all right, and send it via a push notification into your MT5 app. Okay, that means that you will install the MT5 app, right, onto your phone. Okay, and then you can send it to you so that you are able to receive that alert anytime where you are, because we carry your phone with us. Okay, so this is the first automation that you can do. Send yourself an alert whenever a signal happens. Okay, now second, sending an alert is very easy. It's taken for granted, right? But what I did here is to further do it by condensing all the monitoring into a dashboard. Okay, so what is this dashboard about, right? I'm able to put in any of the currency pairs I want, any of the index, any of the crypto that I want, and then anytime that there is the rule that fulfilled, right? That means it met the rules, it will pop up, okay, as a color. So for example, right, so this system, which is under Tor, is every 4 hours. Okay, so every 4 hours, it will pop up, it will scan, all right? It will scan every 10 seconds, all right? And as soon as every end of the 1 hour or every end of the 4 hours, you will pop up an alert. Okay, just let me just give you an example here. All right, the time now, I know it's very small, you might not be able to see it, as 1:01 p.m. All right, if you take a look at this trade here, called 0.01, it means that at 1 p.m., it had a signal, okay? And the signal was a buy signal for Euro Aussie and a buy for dollar Sing. All right, now, why is it 0.01? It means that 1 minute has passed already. All right, so it's a very, very recent alert. So for example, if you're interested to trade into, let's say, Swiss dollar franc or some of the crypto, all right, then this signal was 4 hours old. That means the signal came in at 9 o'clock, for example, 9 a.m. Okay, so I said before already, I'm a 4-hour trader. All right, every 4 hours, I'll be waiting for a signal. Sometimes it doesn't have, but most of the time, it happens at 1 p.m., 5 p.m., 9 p.m., and 1 a.m. and 5 a.m. Okay, 5 a.m. I'm sleeping already. 1 a.m. I'm sleeping already. So effectively, my working hours for trading is only 1 p.m., 5 p.m., and 9 p.m. So these three timing here. All right. So why is it important to do this, right? Because then sometimes people think about giving up their job and trade full time. I'm trading full time. I actually retired for 3 years when I was age 35. I mean, I have enough money for my investment and trading that I actually don't need to work. But I stopped retiring at age 38. All right, because I think that it's too boring. I have to take care of my children, look at my children. They're nice that I spend time with them, really, really very nice. But I think there's more things that can be done. And every day you are just there not doing anything, So if you just spend like 1 year, half a year, it's fine. But 3 years, I think it's long. Okay, so I decided that I must do something. Okay, so therefore, I'm every 4 hours traders, but I also don't want to get very intensive in terms of trading because it can be very damaging to the health. Okay, because I tried the scalping route also, and it resulted in a lot of psychological problem. Okay, to the point, right, at one point of time I can't even move my fingers, right, because I sat too long in front of the screen. My fingers was like holding my mouse in that posture, and because I'm scalping the market, every time you finish scalping, you make 8,000. Sometimes you lose 1,000, 2,000, and you make 10,000 when you scalp in this manner, right? It's exciting. The money is a lot, but then I ask myself whether I want to do this when I'm 60 years old. The answer is actually no. Okay, so every 4 hours, it just pops the alerts to you, and you decide whether you want to trade that or not. Okay, simple tasks like automating your system, building a dashboard to screen and scan everything so it's being displayed, so that when you access it, right, you know quickly, I'm going to zoom into trade like Aussie yen, because then it just happened. Yeah. And then I'm just going to consider maybe if you want franc sing, and then if you want some of the crypto here or some of the other pairs here. Okay, all right. So that's the first things that you can do. Okay, so let me just clean this. Okay, now, so as I mentioned, I have the alerts being pushed to my phone. All right. So what I built, right, is also an earlier alert, meaning that I like to be warned so that I can go and check it out. All right. So I built earlier alerts, right? So most of the time when we talk about indexes, people trade every 1 hour if you are looking at swing trading. If you're looking at forex, right, we have 1 hour trader. We have also the lower time frame like 5 minutes, 15 minutes. But we have the other side, which is a 4 hour, 1 hour, or day trader. Okay, so what I did, right, in terms of this system design is to have an earlier preempt. Okay, meaning that if you take a look here, the preempt happened on the 4th of October. That means I received this alert here. So I know that something might be happening to dollar yen. Okay, then on the 5th of October, which means that it monitored for me, right? And on the 5th of October, finally, it appeared with a 4 hour signal. H4 is a 4 hour, H1 is a 1 hour signal. All right, so you can see the time given to me at 7 o'clock here, but this one, which is a 4 hour, is actually 2100, so that's 9 o'clock. All right. So where is the 9 o'clock trade? So for example, this is the wash here. You can see this red color bar, right? It closed below a previous low. Okay, and that's a wash. And then this one, the white color bar, is a rinse, and then it rinse back up. So our trade happens at 9 p.m., which means that it's probably happened somewhere around here. Okay, in between the confirmation of a day close of the bar. All right. So by having that 1 hour alert, earlier warning, sort of I can guess that, okay, or rather it brings to my attention to slowly at a comfortable pace, right? That I want to go and monitor in dollar yen to see whether a trade is going to happen. So it is not a rush trade. It's always a planned trade so that you can enter a trade at your own pace. Okay, not that you are being rushed into trade, but after much planning, just go in and trade very nicely. All right. So when you design an alert, not only that it's sent to you, but try to have that earlier warning so that you know what to do. Okay. All right. So is this getting a bit tough for you? Because I'm actually letting you know how you can automate yourself. But sometimes the automation, it's tough. Okay. All right. So for example, if you take a look at my trading, all right, and in the previous session, I introduced the auto box already, how to use the boxes. So you realize that trading becomes very systematic, all right, where what I did is, because I'm a 4 hour trader, or rather this particular system is a 4 hour trading. Every 4 hour we put in a trade, right? So with these boxes here, right, if you, let's say we have entered a trade here, all right, because this is actually the entry at 1 o'clock. Okay, 1 o'clock we have the entry here. So the automations also allow us, rather the auto box allow us, right, to continue riding this trade until there is a change in color. Okay, so I rely also a lot on colors in terms of my system. Okay, so this is the whole G's of how Tor system work. Okay, meaning that how Tor, which is the area washed, are being traded. So we take a look at what happened in the higher time frame. All right, and then we build in all these alerts to alert us. We preempt ourselves with a 1 hour earlier signal, but we really only trade into the H4 signal. So how do I trade that? You realize the time here. I receive an alert earlier, 1 hour earlier. Okay, so because this is 1600, Okay, here we go, 1600 here, right? 4 o'clock, I had a H1 alert, and then 5 o'clock, which I told you, right? Trade every 1 p.m., 5 p.m., and 9 p.m. So 5 o'clock, receive a 4-hour alert, but in between here, I can already get myself ready, all right? And you realize that I only put in a trade only 24 minutes later. Okay, why was that? Because my style is to sometimes to go and exercise, after the market has closed. So my main market is the Hong Kong market in the morning and afternoon. Okay, so Hong Kong market closed at 4 o'clock, and I quickly go and do up my other stuff and then go exercise. So by the time I come back to take a look at the forex market, right, for the 5 o'clock signal, I actually miss it a little bit. Okay, but luckily, because I had this alert and I have that dashboard that shows it, so at 5 when that happened and I came back 24 minutes later on my desk, I'm able to quickly put in the trade and I don't miss it by too much. Okay, because I'm only like 24 minutes late. Okay, so these are things that can remove that menial work, repetitive stuff, right? So it might seem simple, but I think that there is a lot of benefit here, okay? Especially if you look back into the problem that you have with trading. It is not only about the method, but things like, for example, I'm a mother as well. So when my daughter was young, I had problem because my daughter is allergic to cow milk, allergic to soy milk. Basically, all the milk cannot drink except one milk. What's that milk? Breast milk. So when she drink cow milk, right, she will vomit. When she drinks soy milk, right, she will vomit until we have to send her to hospital to drip water and then to test what happened. So once we realized that it's soy, at least we found the reason, because she has been drinking soy milk every time we have to send her to hospital. Okay, so I have to actually breastfeed her until she's like 2.5 years old, something like that. So it's very tough to say I want to trade right now, and then the baby is looking for food, So I had this problem, and that's also the reason why I'm a 4-hour trader. Okay, now so let me just quickly also talk about the next automations that you want to have, which is a trade manager. All right, I think that this would be more interesting to you because, wow, you receive the trades, and then how do you put in the trade? Okay, how to let the trade manager manage everything for you so that you don't need to do anything. You just have to decide one thing, right, which is to decide to put in the trade with this trade manager. Okay, so for example, I received the alert just now with dollar yen. Okay, and then I say, okay, fine, I'm not too good in the lot size calculation. I am not too good with managing trades because I tend to just close up my trades very quickly. I get scared, right? Or that you just simply don't know where to put in your stop loss or target profit. Okay, because even if you have attended lessons, the trainers might be going through very, very quickly, you just cannot grasp, right, where the stop loss should be put there. Okay, so therefore, what the trade manager serve in terms of its purpose is to really help you manage your trade such that it just really let you sleep. Okay, so I just wanted to share this one with you because I think that at this stage that I'm trading, right, our life is really too short to spend time staring at the screen. Okay, so when I was young, I studied a lot of all these automations, and I actually did a lot of statistics and math in my university and master's days. But at this moment, you ask me to stare at the screen and then to trade and then to look through tons of books, right? It's beyond me already. Okay, so I make one remark. It's too precious to miss our sleep at nights. Okay, now so let me just quickly cover this weaknesses. I covered the weaknesses already. So if you overtrade, first you have to manage your risk. All right, so you can put in things like, okay, the trade manager will control the overall risks that you're going to take. So for example, every trade you're going to risk 1%, but there's a manager who can overlook, all right, at all your trades and make sure that your total trade risk, right, does not exceed X%. Okay, so this is very important because let's say, for example, you put in 20 trades, right? Every trade is 1%. 20 trade means that you're going to risk 20%, right? Correct? Okay, now, so next is that if you have problems of holding losses, in fact, that a lot of people came to me because I also trained for SGX Academy. A lot of students came to me and said they had this problem. What problem do they have? All right, during and slightly after COVID, the market was really very good, right? Whatever that you bought, right, you just have to wait a little while and it will just move down. So a lot of people went to do the US market, but when it started to correct recently, last year, starting in December, they realized that a stock that they bought at $400, they correct to left only $50. It's very, very common, right? And the problem is they don't dare to cut their losses because when it $400, when it moves to $300, right? They think that if they can just hold a little bit more, it might just recover to $400 like in the past. And when it moved to $200, they think that, oh yeah, it's already half price already. I mean, just keep it for a while. They never expect that it will go to $100 and to $50. Okay, so when you have, let's say, an automations that strictly without emotion cut it for you before you even know that you actually cut your losses, that might be a good thing. Okay, so a trade manager serves this purpose because then there is a cut loss function there. And lastly, if you want to write a trade and then you are not there to add your trade, right? That means to add to a winning positions, they can do it, especially calculation of lot size. So I'm just going to demonstrate quickly to you the first thing you need to consider to outsource, okay, which is your risk. Meaning that that's a lot of trade managers, and I do understand that Phillip Nova has this particular add-on in your MT5, right, that automatically let you calculate the lot size. Okay, I may not be very updated whether they still have this, but I understand previously that they had this particular EA that calculate the risk lot size. Okay, so this is very important. For example, when you want to put in a trade, instead of you deciding what is the lot size. So for example, if you do, let's say, forex or index, right, your lot size could be one lot, or you can just trade 0.1, right? But if you can, right, use the trade manager to go and determine your risk, that would be very, very important. So we determine the risk via the percent and via the amount. Okay, percent means that how many percent of money that you want to lose in your account, or what is the amount you want to lose, all right, per trade. So for example, I want to lose $100 per trade, or I want to lose like 1% of my account. Okay, so this is the risk, right? So let's take a look at just a sample, and I explain fully how this particular trade manager work, just as a sample to see how things go. Okay, so let me just roll back what happens in a fast speed. Okay, so the trade manager will automatically enter for you. So when every 4 hours, you will see these, let me just pause for a while, see these blue color arrow here. So this is the entry. All right, now you see this green horizontal line. I won't say a line, but maybe a dot, right? This is the stop loss. Okay, and the profit, right, will be somewhere on top that has not shown yet, because usually what we want is we want a lot more profit than our loss. Okay, so we ask for a reward to risk ratio. So for example, the reward is the risk is 1 time. We want that the reward is 2 times or 3 times. Okay, so first thing, what happened in the trade manager is it's automatically open the trade for you, so you do not need to be there to go and put in the trade yourself. Okay, that means that promptly at 5 o'clock or at 9 o'clock, it will automatically open for you. All right, okay, but of course that you have to give an instruction to the trade manager to say, okay, I'm ready to open this trade. Please, help me open this trade when all the rules are met. All right, so it will automatically put in the stop loss for you as well. Oops. Okay. All right, so I won't post it anymore to prevent this technical issue. And later I will just explain. So auto entry, right? And as it moves, right, one of the functions of this trade manager is it will automatically shift to break even by taking partial profit. Now, this partial profit is very important because when you take partial profit, right, you feel at ease, you know, you don't feel the pressure to quickly close your trade. Because in this case here, right, you can see the trade actually retraces. When it retraces, then you know that you already have some profit there already, and the trade has been shifted to break even. So I realize that each of this blue color arrow here is where the trade automatically add new winning position. And then you see this little horizontal line here, the trade manager auto shift the stop loss and keep on adding and then shift the stop loss every day. We call this a trailing stop. Okay, so it keeps trailing in terms of stop, and then lastly it auto exit because then you know it exited at the stop loss. That means the whole entire position, all right, has been stopped out because then price turn. Okay, so this is one function of the trade manager where number one, it automatically enter, it automatically calculate the lot size. Let me just mark this one down here. This is the lot size here. Oops, auto lot 300 USD for this particular trade. That means I want to reach 300 USD for this trade. All right, and it has the option to automatically take partial profit for you. Okay, so once it has taken partial profit, it will shift everything to break even. That means no loss. Now, why is it important to shift to no loss, right? Some people don't like it. Why? Because they say, okay, if I take partial profit, that means that if the trade can move up like 500 pips, you asking me to take only a little bit. Okay, so some people don't like. But if you look at the benefit of having a partial profit and then to shift everything to stop loss, it has to do with psychology. A lot of people dare not stay on a winning trade because of what reason? Because they are afraid of losing. They are afraid that this trade might be like last trade. If I don't take, all right, then it will turn out to be a loss. Okay, and a lot of people cannot stand that fluctuation. I mean, question to you, right? If you look at your account, it moved up by $500, and then suddenly you see that your account only left with $50, what will you do then? What do you think? If you have $500 as a profit, and then suddenly look at it when you're in the toilet, right? You're not supposed to bring your hand into the toilet, but you bring your hand into the toilet and you see that it's left with only $50. What do? You have two options, right? Continue with the trade, don't look, or many people will, what happened? Close the trade, isn't it? Because if you don't close it, you might not even have $50. Is that so? Give me your response. No? You don't have this experience before? Okay, you guys are really fantastic because you don't bring your handphone to the toilet. Okay, all right. Okay, so what it does also is keep on trailing your stop loss. Okay, so trailing stop is something that you want to do as automations. Why is that so? Because if you don't do trailing stop, right, and depends on how you design it. If you can put in trailing stops, it will help you protect your profit because nobody will know how far it can go, okay, and then when it will start turning. So it's very important to consider putting in a trailing stop so that you know it can protect more profit as price move. Okay, so this is a feature which I strongly encourage. Okay, so when you design your trailing stop, the problem is that some trailing stop can be very tight, and some trailing stop, right, can be very wide and doesn't serve the purpose. Okay, so you can use things like moving average to help you, you know, in a trailing stop. But the problem is that you need to know what kind of moving average to use, what is the period of moving average, etc., according to the system. All right. Okay, so I just highlight a little bit more later on. Okay. Oops, I don't want to show this one. Okay, so the first thing you want to outsource, and this is something which I emphasize a lot, the basic criteria. Okay, let's say you don't want to receive alerts, you don't have notification, it's fine. But basic criteria, which is a menial work, and it has to be outsourced, is the determination of your lot size. And this is so simple, but it's so effective, right, to prevent you from blowing your account. Okay, so in terms of this trade manager, there are three ways that we use in terms of risk management. Okay, first, we can define that I want to have a fixed lot size. That means every time you don't care, you just want to put in one lot. Okay, so this is a fixed lot size, which we are very familiar with. All right. The other way is that we can define this as a risk percent of account balance, meaning that we can say I want to risk 1% of my account balance. All right, so you can choose risk percent. So let's say if your account is $10,000, 1% will be $100. So every trade that you do as 1% risk. Now, if your account happens to decline, the decrease in value, then the risk will decrease. If your account happens to increase in terms of value, then the risk percent still being the same, but the actual amount will increase as well. Okay. Now the third way is to use risk amount in account currency. Okay, meaning that you say, okay, this trade here, regardless of my account size, I want to use $500. Okay, so $500, you're gonna put every time 500, 500, 500, 500. If your account decreases, lesser money, you also put 500. More money, you also put 500. All right. So once you can put in this already, you will automatically decide your lot size. Okay. So just give you this example here again. So we put in $500. You will open a trade. All right. So this one, I just want to showcase, right? You see that this red color arrow here, it took partial profit. Okay. The profit has been partially taken. Do you see that the stop loss has been shifted? That means that the initial stop loss was here. So this was that initial stop loss, initial SL. Okay, so once it's taken profit, so this is the new SL. Okay, now it means that if price is to move up to hit that new SL, you're gonna make $0 or lose $0. All right, so this is a very function that you want to consider. Okay. Now, by having that auto lots, every time you find that it just helps you in terms of your trade management. And let me just erase this, and then we will continue. I just want to run through this video quickly because I want to explain what happened in terms of the trailing stop. So this is the trailing stop being put in. All right, and one of the winning things in terms of this trade manager is auto adds, meaning that if it doesn't make money in the first place, it doesn't add. But only if it makes money, then it continues to stack the position. This is very important because the other way of an EA is to keep on averaging down. Okay, but this one is only average, right, when it makes money. Okay. Okay, so let me just go through what was being outsourced here. Number one, the auto entry. That means that automatically just put in a trade and automatically enter. All right, and auto shift of the stop loss. There are two functions of shifting. One is it's shifted when it gets into the break even. So sorry, it's shifted on the interim profit target, meaning that when it moved in a direction by some extent, you automatically take profit and you shift that stop loss into break even. Okay, and then every day it will start to trail. Okay, and next is to add in the winning position, and lastly it has the auto exit function. Okay, meaning that you will automatically put in a profit target for you to know when you should be exiting the trade. All right, so let me just browse through, quickly go through what happened. Okay, so this is the actual trade that happened in our group. So it happened this way. Everybody with the dashboard can know there is likely a signal in euro. Okay, but what happened is that sometimes you are not too confident to put in the trade. So what I will do is I would just write a simple things or just do a bit of a recording to say, hey, look, this is a planning in the euro dollar, pending 5 p.m. close. Now, this is to say that if you are using the trade manager, you can drag the trade manager into the euro trade for it to open at 5 p.m. Okay, meaning that you don't need to be there at 5 p.m. to trade it. All right, and because we had the earlier 1 hour warning, so the warning was already there. All right, so there's plenty of time to put the trade manager into a chart to let it trade. All right, for us, the development right now is turning into a 100% automated EA. That means that totally you don't even need to drag. But we have one group, right, where this group is pro trader, professional traders, right? So they are from Taiwan, Australia, New Zealand, US. These are pro trader that they want to have a bit of a control, including myself. I don't think that I'm stupid, so I want to at least decide whether I want the trade to happen in euro dollar, because I learned a lot already. I learned so much. All right, if I totally outsource to the machine, I just feel useless. So at least I just want to decide, and this is what a lot of pro trading houses they are doing. They have position keeper, they have decision maker. All right, they have analysts, and then they will decide, okay, I want to take a stand, I want to be bearish on euro from now onwards until the other scenario happen, and then the people are trading in that direction, guided by that that directive. Okay, so I posted that at 5 p.m. but the students will also be alerted by the dashboard onto their handphone. Okay, now then 5 p.m. the trade automatically open. Okay, but at the same time at 9 p.m. it will take partial profit. Okay, why? Because then it has reached the interim profit already, and then the entire basket shifted to stop loss. Now, why is this very important? A lot of people cannot sleep with their trades. Can you guys sleep with your trades? I mean, do you have problems sleeping when you have trades going on? That's basically my question. Especially if we're talking about not stocks, okay, but forex, gold, or crypto, etc. How many of you can sleep with your trades? Let me know. All right, so that basket has been shifted to no loss, okay, and then after that I'll just go to sleep. Right now, next day what happened is that the stop loss in terms of that trailing stop is set in a way that it happens at a fixed time. So why do I want to set the stop loss at a fixed time? Because if you take a look at the market, which is before close, which is pre-close, and slightly after close. So if you are awake at 5 a.m., you take a look at the spread at 501, 502, or 505, right? The spread, will be just outrageously large. Okay, what do I mean by outrageously large? If you trade into, let's say, the miners, okay, so for example, Aussie yen, Kiwi yen, or even the crosses like Euro Aussie, the spread can be as large as 30, 40, even 50 pips. All right, so if you put your trailing stop too close to that, you might wake up to say, okay, I've been stopped out, and I've been stopped out at a lousy price, and you blame the broker. No, that's because the spread became too wide. So if you start to shift your stop loss too early in the early hours, all right, or you just use some indicators to shift the stop loss, when the spread just open up, right, then you are just out of your trade, like nothing ever happens to you, and then instead of making profit, you actually make a loss. Okay, so when you consider shifting the stop loss, what I decided to do for this particular automation is to shift it based on time, meaning that it would just be religiously every 9 a.m. it will shift the stop loss for me. So whether I'm exercising or having my breakfast or whatever, at 9 a.m. it will shift the stop loss. So initially we entered here, right? Okay, and then before I sleep, okay, already shifted to no loss. Okay, so the no loss, right? And then at 9 a.m., which is somewhere around here, the SL was here, right? And then shifted to the new SL. Okay, so this was, let's say, original SL, and it shifted to SL1. All right, and then nothing happened, and I just go to sleep the next day. Okay, now then what happened the next day then? Oops, just give me a minute. Okay, so this was the next day. At 9 a.m. again, it shifted the stop loss. Okay, without you doing anything, you automatically shift the stop loss. And if the rules are met, that means, you know, the price move and I have enough accumulated profit, then it will just add position, which in fact I added the position in euro at 5 p.m., 9 p.m., 1 a.m. Okay, now why is it that 1 a.m. you add the position? Because the rules met. But what happened when it's 1 a.m. to you? What are you doing at 1 a.m.? I'm actually sleeping already, for sure. I sleep at 10:30, 11 o'clock. So 1 a.m. is just impossible for me to add the position. But with automations, it just added for me. And a lot of people have this problem, okay? That means that when they have a winning position, they are actually scared to add. All right, but they love to read turtle trading. So turtle trading is like this, you know, they are given rules, and what they do is just to follow rules, right? Every time it hit a new high, they will just enter, keep entering until the trend dies. All right, but when you read turtle trading and you realize, wow, that's a fantastic method. When you are doing it, that's a different matter, you know. Sometimes you just have 101 reasons to say I can't do it, I can't add the position. All right, but if you can just let the automations do it for you on the basis that whichever position that you are going to add is going to result in the overall basket as still profitable, that is doing something that you dare not do and just going to outsource the most tedious task, all right, which is your emotion to the automations. The automations doesn't care. The automations, when it runs on math, 1 + 1 = 2, and when 2 happens, they just add. All right, so this is the reason why, being in a job myself, all right, looking at how the other people, the big guys, you know, people that earns tons and tons of money, I realized that it has to do with automations. All right, it is not that guru method, that holy grail. It is that trade management. Okay, so the next thing of why you need automations is that calculations of new positions, because this particular automation will calculate your accumulated profit. That means that if you have accumulated, let's say in this trade, right, a total of $500. Okay, so the automation would take out a portion of the accumulated profit based on the new prices that is going to add, and based on the new stop loss you're going to put, and automatically calculate in that stop loss to hit a certain reward to risk. So when I tell you this particular formula is, I have so many moving parts. What is the reward to risk? What is the entry price? And entry price must go and put in your stop loss, and stop loss must go and calculate my lot size. My lot size must fit that whole basket is profitable, etc. So all these, if you press the calculator, I think that you're going to spend like maybe 5 minutes or maybe 3 minutes to do that. But when we have automations, instantly pop, in just a millisecond, it's being added already. Okay, so there is a lot of benefit if you can outsource this to a trade manager, especially on writing a trade. All right. Okay, then again, it's trailed the stop loss, 9 a.m. On the day 4, it started to shift and it started to add, and then 1 o'clock it sleeps, and etc. And finally we reached that profit target. So this was a trade. All right, of course, again, a disclaimer, we have losing trades, but I said before, losing trades, you cut your losses quickly. But this particular trade, right, we had about 310 from the first position, and the add-on positions about 100 pips. Okay, so this is how you know, we fulfill that rule. Okay, let your winners ride and then cut your losses fast. Okay, I admit that as human, it is very difficult to execute. Even myself, sometimes I find it very, very tough to keep on adding with my eyes closed. okay? And especially I find it so tedious to go and calculate the lot size, all right? But with automations, all right, once you set everything done, it's very easy already. All right, so I'm just gonna demonstrate the automations to you live. You guys are interested to see it? Okay, so currently we are still developing the MT5 version. So I'm just going to show you the MT4 version. It's the same. All right, so just go through how we trade now. Okay. Okay, so what we do is we rely on this dashboard. Okay, so this is a demo feed. I'm just going to refresh because I just gotten this demo feed especially for this session here. Just let me refresh this one. Okay, just for a while. Okay, focus on the left hand side. Let me just do this one here. Okay, so this is the actual feed that we received. That means that everything has been lighted up here. So there's plenty of trades today. All right, so what happened during 3 hours ago? So right now the time is 8:15, right? 3 hours ago, what time will that be? It's actually 5 o'clock, isn't it? Okay, 5 o'clock, we had a signal in euro dollar. So this was the signal in euro dollar. All right. Okay, so what can be done is you can just go to the euro dollar screen here. So this is a euro dollar screen. All right. And if you have already put the trade manager in, right, before 5 o'clock or at 5 o'clock, it will automatically open for you. Okay. Now, let's say, for example, I know that there is a signal for euro at 5 o'clock, and after I've checked that, I'm very happy with this particular trade. I want to put in the trade, right? Okay, so then what can be done? As long as it's within the space of 4 hours, okay, before the next bar happens, right? Which is right now, it's about 3 hours and 15 minutes. You can just drag the trade manager inside, okay? Or you can just put it inside here, like what I'm going to do, just drag it inside here. All right, so this is what you see in a typical, what we call EA, expert advisor, whether it is for MT4 or MT5. All right, few things that must be done. Okay, number one, you need to change the matching number, so it's like a unique identifier. This one is not very important. All right, more important is you just need to do one thing. You just need to determine what is the risk amount that you want to have. Okay, what is called the risk amount? How much do you want to trade here in this particular trade? Okay, so for example, just now in the afternoon at 4 o'clock, I was just going through the euro trade, and then we determined that the trade is a counter trend trade, but it still has a bit of a potential for euro dollar. So we decided that we shouldn't be spending a lot of money. Okay, so for example, if usually you can choose this risk percent of account balance or risk amount. Okay, risk percent means that you want to risk 1% or 2%, right? So if usually that with the trend trade you risk 1%, then a counter trend trade, which you still want to take it, right? You can tell the trade manager, I want to risk only 0.5%, half of what I usually risk. Okay, so when this happens, all right, it will automatically look at your account size, which is 0.5, and open trades that if you are stop out, you're going to lose 0.5 of your account balance. All right, or you can say, I want to do it based on my risk amount. Okay, so for example, I have made $1,000 earlier, and this trade I'm not really very confident. I just want to take out like $100. Okay, $100 to put in this trade here to try. And then if I lose 100 is 100, at least I still have $900 left. Okay, or even you say, okay, I'm not too sure where to put the stop loss, I'm not too sure where's the lot size, but I just feel that I want to put in $88 because then it's lucky number. Okay, So $88, and you don't need to press the calculator. And the rest of the thing, you can just put it here as it is. All right. You will automatically decide based on the signal, based on the tall signal, the wash and reads, right, whether you should be doing a buy or sell. Okay. And then once you have key in how much you want to raise, all right, let me just allow the live trading here. I forgot. Let me just give me a minute now. Okay, sorry. Okay, allow the live trading here, and I just do same thing, $88. I want to raise $88 for this trade. Just put it in. Okay. Just give me a minute. Okay, never mind. Sorry, just okay, same thing. I just want to raise $88. Okay, done. All right, so you will automatically buy in this trade here. For you, for example, you want to lose $88, right? So you bought in 3 separate orders of euro dollar. Okay, each of them is 0.05. Okay, so for example, you just go to the account size here. You see that's the euro dollar bought in already. All right, and then you will automatically put in the stop loss and the target profit for you. Okay, and that's it. That's how you use the trade manager to open a trade, and just leave it there and hope that, I mean, I won't say hope that it will get stopped up, but hope that it can get into the interim profit target so that it can shift the stop loss for you, all right, to break even and continue to add the position so that it becomes a profitable trade. But the whole thing is that, you know, it probably take you quite some time to go and calculate how much is $88, right? What is the lot size? But to the trade manager, it's just auto, and that's it. We just have to do this, right? Within the that window of 4 hours. Okay, now what happened if you come back at 9:30? Okay, it's away from the window of 4 hours, right? Then we have an extra function which allows you to also put in the buy and sell anywhere that you want. All right, then it will be managed by the trade manager. So let's say, for example, you have your own method, right? And the method is to buy on breakout. Okay, you are there to trade, and you want to make sure that you control your risk very well, and you want to make sure that everything can be outsourced to the trade manager. So what we usually encourage students to do is to look at, let's say, you know, the direction that they want. Okay, just use the trade manager GUI, which is the graphical user interface, and to put in a trade. Okay, so let me just demonstrate this one for you. Just close all of them. Okay, so all of them closed already. And let's say, for example, I want to trade into pound dollar, for example. Okay, so this is pound dollar here. All right, same thing. You know, I don't want to have $88. I just want to make a bit of changes here. I want to raise 1%. Okay, so you always do like change this portion here. I want to raise like 1% of my account. All right, and then call out the GUI. This is the GUI here. Okay, so right now, let's say you want to buy the trade. Okay, so I will want to buy euro dollar, just buy it. And you say you want to place a trade with euro dollar on a buy trade. Are you sure you want to do this? So it's a bit like threaten. No, not threaten. Just double confirm. And you say, yes, I want to do that. So you are risking 1% of account size, and you don't know how much is the equity. You cannot remember, you cannot count, right? So you just say, yes, I want to do that. And you automatically, you know, buy in all these trades for you. Like, for example, each of them is 0.06, and the total lot size would be 0.18. So when you want to stop out of this particular trade here, then you would be losing, you know, 1% of the account. Okay, so you see that the stop loss has been put in here, and you see the profit target is actually up here. Okay, so you will automatically determine the stop loss and the profit target for you. All right. Okay, so this is how we make use of the trade manager to help us overcome a lot of problems, including the basic, right? How much risk I should take and what is the lot size. And this is also very important because when you are trading into different instruments, let's just close the trades, right? When you are trading into different instruments, right? Let's say, for example, you want to know gold, okay? I want to trade gold, right? And you don't know how to calculate the lot size of gold. And I still want to raise, let's say, $100, okay? But you just don't know what is the lot size of gold to result in a loss of $100, okay? So what the trade manager can do, all right, is it will automatically be able to deduce that sizing for you, okay? So you don't go and over trade or you don't go and under trade. It's just nicely, all right, to be able to trade, like to lose $100, okay? So let's say, for example, I want to go long this trade here on gold and I'll lose $100. I just have to click buy and just do this, okay, yes, and then that's it. Just can put in the trade for you and calculate this trade here, which is 0.02. Okay, so the method of entry, if you wanted to put it 100% auto, will follow the TOR system. Okay, but if you want to, let's say, use the GUI to just go and trade it at any one point of time, and you want it to trail for you, and you want it to, like, let's say, calculate the lot size, and you want it to shift break even to you for you, right? Then it will follow again TOR system, all right, which is the system I designed. But you know, you determine the entry yourself on where you want to put it in. Okay, so there's two more here. One is the auto, the other one is the manual. All right. Okay, so I've demonstrated the trade manager. This is one to ask whether you have any questions. Any questions that you have regarding how this happened? Or any things that you want to clear up on the use of the trade manager? Okay, so I just wait for your questions to come while I just go through the last few parts on this thing. What is the performance of this auto system thus far? What is the average profit? Let me see the full question. Loss per year. If you heard me correctly, this is the trade manager where you decide on direction. Okay. I have not included on this slide here, but we have students who just put in everything. That means that whenever there's a trade, they just put it in and they don't care and they use the demo account to trade, right? So in about less than a month of testing, of course, they also don't trust me entirely. So based on less than a month of testing, they made about 2,000 plus on a $10,000 account, if I'm not wrong. Okay, they have mix of wins and loss, and then they just put it in. Okay, but if you see this trade manager, you have to remember one thing. All right, you decide what to open. Okay, so this is not 100% trade. So for example, I decide that I don't want to take counter trend trade, and therefore I would decide to open only with the trend. Right. So if you take a look at what happened in terms of the oil trade I mentioned, right? So the oil trade, which was mentioned last session, all right? The oil trade here, the long here. So if you have the trade manager, all right, you are able to last the trade, right, all the way to the top and hit the TP. So this, in terms of reward, is like that, okay? And the risk is probably like that. Okay, so this reward is probably going to be 5 times of your risk one time. Okay, all right. Now, so if somebody else decided not to put in a long trade for oil, as I mentioned last round, I mean, I'm not sure whether how many of you actually put in a trade on oil, because I mentioned oil here, just here. Okay, All right, do you put it in? If you never put it in, then this trade to you is equal to 0 profit, whereas somebody else who used it is going to find themselves 5 times of the money potential to the loss. Okay, so this is very important. You decide what trade you want to put in. What it does is that it outsources all these menial tasks for you. All right, just give you a real case. Okay, so if you take a look at what the oil right now, it's coming down, right? So if you, oops, what am I doing? Sorry. If you take a look at oil, let me just add in for you. You can just go into this dashboard to add in whichever that you want. Let's say we do UK oil. Just let it refresh for a while. Okay, if you take a look at UK oil, right? There was a signal, okay? And the sell signal was 112. All right. When did this signal happen? It happens 3 hours and 30 minutes ago. Okay, now right now the time as we are talking is 8:30. 8:30, 3 hours and 30 minutes ago, what was the time that the signal happened? 5 o'clock, right? Okay, now 5 o'clock, if you never have this system here, you don't put in a trade manager, or somebody else decided not to do that, right? Then you won't get that trade. Okay, but if you take a look at what's happening with the oil right now, okay, our signal to short into oil, as you see live here, happens at this price here. Okay, all right, if you go and measure, let me just erase this. If you go and measure the price, it was 111.23. Okay, take a look at US oil. Okay, 111.23, somewhere around here. Okay, that was the trigger. All right, you just put in the trade manager, it let you manage the trade. But you know, the automation, one part of the automation that I'm actually talking about is not only about putting in the trade, it's about also getting alerts of that signal here to know that, okay, I want to consider short the oil. All right. What is the algorithm for the EA, TA, MACD? No, none of this. What is the average win rate for TOR? Okay, so this is one slide, right, that I skipped. And I decided to actually cover. Okay, so when we talk about, you know, profitability and whether overall you can win, right? People ask me what is the win rate, but when we design system, we don't consider only the win rate. We consider the profitability, okay, which is what we call reward to risk ratio. So if I have an accuracy of only 40%, that means that 4 right, 6 wrong. If you have a reward to risk of 1:5, so every right you make 150, every wrong you lose 100, then even under an accuracy of 40%, you get break even. Okay, so I have a system where the accuracy is 5 right, 5 wrong. That means that only 50%. All right. But if I have a win rate, that means every time you win, right, you make 150, you lose 100. Then even on a 50% accuracy, it is $250 profit. You are profitable in this system here. So when we design a system, we asked what is the win rate, but a win rate can only be 30% if you have the profit, the profitability, the reward to risk, right? If it's 2 or 2.5, that's very high. Okay, so for you see that TOR has not been made 100% automated because I've designed so many systems. I simply know that 100% automation just doesn't work. Even my clients who are family office pro traders, they have position keepers to guard the position, to even look at how the position should be placed. Okay, but for myself, I will only talk about myself. All right, The reward to risk for most of my trades is hover around 2.3, 2.4. All right, accuracy is about 60 to 70%. All right, but remember I said before, this is not going to be your accuracy. Okay, because I said before that even if I can hold a trade like yens, okay, the yen pairs, I've been holding them. I can hold them for 10 days, hold them for 20 days. I hold a euro short for years. Okay, I mean on real cash euro short, right? But whether you can do it or not, you know, it's not comparable. So this is something very, very important. The current automation is for the alien watch. Yes, whatever that I've shown here is what the alien watch is using. Okay, so instead of bringing out a hard topic to say how you can design your automations, I decided to show you a whole series starting from explanation of wash and rinse, starting from talking about auto box, and finally how we trade. We receive the alert, we put in you know, the trade manager, and then we let everything do it ourselves. And what are the weaknesses that we have outsourced? Okay, since we are talking about the alien wash, let's talk about, you know, since I have not a lot of time here, so let's talk about a few things. Number one, you can do the wash and rinse course for free. It's module 1, you can just do it for free, not chargeable. But if you like to get the trial for the indicator that plots all these arrows and ticks, right? Let me just show you where is it. Okay, before we get into that, right? So we have a promotion with Phillip Nova. All right. If you sign for the course, which is $700 SGD, not 7,000, no upsell. Then if you fund your account with $5,000, you get a cost refund of $150. Okay, I repeat this promotion, right? Meaning that you pay for the course, and then you tell Phillip Nova that you would like to fund 5,000, or your existing customers, you have $5,000 in your account already. You just take the cost membership profile or the receipt, and you go to Phillip Nova and say, hey, look, you know, I like to go for this promotion. All right, and then they will put $150 cash inside your account. So effectively, they are sponsoring for your course, and your course fee is $550. Okay, so go to this link here. Later, I'll just put it up for you so that you can go and take a look. All right, so the course fee, so the course, what is in the payable course module? You can take the module 1, which is free, but the module 2 will cover how to go to the lower time frame to go and put in the trade. That means that just now when we had the trade in oil, right, that happens at 5 o'clock, then how to determine that this is the correct trade, this is the right trade, you know, how to put in the trade. And then you will get indicators such as the auto box, okay, which automatically draw in the boxes. You will get this MTF, which draws in the wash line. You will be taught how to formulate a trade, where to put in the stop loss, etc. And you get the dashboard, you get the trade manager. You also get how to trade stocks, right, with the TOR strategy. Okay, now what's included in the module 2 as an online course, meaning the course is online. You can study and watch the videos for as long as you want, but it includes a 12-month support. Okay, so 12-month support is under this plan called the Alien Room. Right, so what is in this 12-month support? You get the use of the full suite of indicators for 12 months. You have a daily broadcast of signal into your Telegram. You have twice weekly. That means that in a week, right, there's 2 webinars on what to trade, and then a revision on the costs. And then you get the Facebook group as your support group, and as well as you know, the trades that we're gonna take. Okay, so this will be the full package. All right. So if you like to get the indicator trial, this is the website. So I'm just going to type this for you, but you can scan it. Let me just type this one. Okay, so this is the indicator trial sent to all of you. Yes, I think it's sent to all of you. All right, and for the promotion, it's only the first 20 approved accounts only. So we have a lot of people having a lot of interest in this promotion. All right, so We've run this for 3 sessions already. All right, so just make sure you don't miss out because they only have the first 20 approved accounts. Okay, all right. If you look at the investment, which is your cost fee is $550 for the support and the automations, I think that's a fantastic deal. I mean, personally, I think so. All right. Okay. When you do this promotion, when you apply for Phillip Nova account, please let them know that you come from my session, Binni session. All right. Then how to go and get this MT5 account? You must do it within the 14 days from today. Fund a minimum of 5,000, get the tour course, and go to this website here where it will let you know all about the promotion details. Okay, so that's the website. Send to all of you. I just leave this here for a while so that you can scan the QR code or copy the website. All right, then you can just go there and look at the promotion details. Okay. Same thing, you just have to submit your MT5 number and the course receipt or the membership profile to Phillip Nova. That can do already, and then they will put in a $150 cash reimbursement inside your trading account. All right, so let me just